Housing has been the best performing asset class in history, according to a research tracking various assets over 145 years, even better than stocks. This was documented going back to 1870 in a 2017 paper from the Federal Reserve Bank of San Francisco titled The Rate of Return on Everything, 1870 to 2015. The average real return on global housing from 1870 to 2015 was 7.05%, compared to 6.89% for equities. The housing return also came with substantially lower variations in returns, meaning less risks. However, real estate has some unique challenges, making it impossible for any individual investor to access safe and high returns. For most, the paper assumed that you invested in 16 countries at the same time and managed the properties efficiently without any gaps in long-term tenants. Sounds easy, right? But here's a little secret. Individual investors can compensate the lower rate of return by doing an Airbnb. Even just by renting out as a short-term rental for like 5 years, it can compensate your average return quite a lot. Hello, I'm Jay. I'm the founder and data scientist at Airbtics. I help individual investors to accelerate their path to financial freedom with our real estate market intelligence platform. It helps you to uncover markets with high Airbnb revenues and appreciation potential. So before we get going, it is important to note that the real estate return includes both the asset price increase and the net rental income. Each makes up about half of the total return. The average 2023 price for a home in Savannah, Georgia was about $200,000. Assuming you buy without mortgage, you'll pay the home price plus $6,000 including various closing costs. So your total initial investment will be $206,000. We can estimate property taxes at $2,019 per year according to this calculator, and maintenance costs at 1% of the starting value, which is $1,950, increasing with inflation each year. This amounts to the total monthly operating cost of $331 to start. On average, one-bedroom rental makes $1,600 per year. This gives a profit of $1,269 every month. Average property prices in Savannah have been increasing at 7.6% per year in the past 5 years. But let's conservatively assume that the real estate asset grows at a rate of 5.5% per year, which is an average year-on-year increase in the US housing market between 1992 and 2023. Based on these assumptions, this investment will have an average annual return of 9.28% per year after 10 years before taxes are considered. For comparison, the S&P 500 had a 9.67% average annual return between 1994 and 2023. Let's put this on Airbnb. On average, one-bedroom Airbnb in Savannah makes $42,632 per year, but with a higher maintenance cost, which is around $17,053 per year. This gives about $2,132 in monthly profit, which is $863 more profit per month. So the rate of return increases to 12.01%. If you manage your listing well, you can increase your daily rate while maintaining the occupancy rate. So for example, if you perform at top 25% in Savannah, your yearly profit will increase to $37,000 per year. Your rate of return further increases to 13.63%. Furthermore, let's say you buy a 20% below market value property. These are the properties that need to be sold quickly at lower prices. Then your initial investment of $260,000 could reduce down to $170,000 only. In this case, your rate of return will be further increased to 14.23%. What's incredible about this is that there are so many variables you can control, unlike investing in stocks. So you can manage your property a lot better for higher returns. Unlike stocks, you can also find investment properties lower than market value. Now let's talk about the risks. The biggest risk for short-term rental can be the regulations. What if the city you invested in started to tighten up the regulation gradually over the next 10 years? Let's say the city puts a 180 days limit on STR, which happened in Sydney, for example. Or maybe in 10 years, the city may completely ban the short-term rentals, just like New York City. Then you still have an option to rent it out to a long-term tenant. So even in a best scenario like this, your investment will still generate steady yields while appreciating in values. Another risk is the underperformance of the home value appreciation. This can happen for various reasons, and this cannot be easily predicted. However, this can also be mitigated by investing across multiple markets or even multiple countries. We can apply the similar logic approach to how those fund managers lower the risks of their portfolio by doing a diversification. Diversification in real estate should be more efficient than diversifying stocks because the markets are less correlated, meaning that there's less chance that the local real estate market in Mexico will follow the suit of the US market. So even if some of your portfolio doesn't perform well in the short term, other portfolios may overperform and can compensate for it. Diversification isn't something that I know well about, so I recommend you to watch other useful materials. Ben Felix has a few useful videos on this topic, and he's also the one that I benchmarked to create this video. So how can you manage your Airbnb in different countries? So this is actually easier than what you may think, and this is actually a quite common practice nowadays. So you need to use smart lock for auto check-in. So the guest can check in without you. You can manage all the settings of your door lock, like changing the passwords, just from your mobile phone. When it comes to managing your property, the biggest challenge is going to be the cleaning. There's a platform like Tarno where you can hire local Airbnb cleaners just from online platforms. Yeah, once it's set up, you just have to visit your property once a year to get all year-round bookings. I've talked to quite a few Airbnb hosts who's just visiting their property very rarely. So this can be the way for you to diversify your portfolio. So now let's put all of this together to plan out your short-term rental portfolio. You'll start with understanding the various markets by looking at their short-term rental yields and real estate valuation related indicators. You can use Airbtics to see short-term rental related statistics like past year average revenue and occupancy rate. You can also see real estate statistics such as historical property price changes, population, and income growth over the last 5 years. Once you pick a market, you can get an in-depth analysis of the best neighborhood and best type of properties from this heat map and top properties feature. Another thing you can do is you can also find a few good neighborhoods to invest in, not just one but many, and wait until you find the below market value properties. This will be a lot easier when you have various markets to monitor and invest in rather than just one market. And finally, you can use this Airbnb calculator and store your research to keep track of your due diligence. So do you agree that short-term rental investing is an appealing option to accelerate your wealth building with relatively low risk? Tell me what you think in the comments. Thanks for watching. My name is Jae-seok An of Airbtics. I'm also looking to invest in either Mexico or Uruguay in the coming months. I'll be talking more about short-term rental investing with the data of our company has. So subscribe and click the bell for updates.